I'm Owen Bigland. This is the Inside Edge video blog. Okay, time for a quarterly market update on the current status of the Vancouver real estate market. We'll mostly talk about Vancouver. That's my main market, downtown Vancouver, east side, west side, but you could put in Burnaby, Richmond, Coquitlam into this mix as well here. But of course, all you hear on the news and in the newspaper is the Vancouver real estate market is slowing, and yes, it is. I'm going to go through that in a minute here. It's definitely slowing. Most of it is a number of factors. Interest rate hikes and more to come. The war in Ukraine, the inflation running wild, the economy. It's a bit of a perfect storm here. And I would throw in, coming out of COVID, buyer fatigue. We kind of, just like in the stock market, we kind of squeezed 3 years worth of purchasing, maybe 3.5 years worth of volume into a 2-year window because there was nothing else to do during COVID. May as well buy a house. But, it's a tale of two markets, like I always say. The luxury higher-end product, and I'll give you some frontline stories from my own listings here, over $2 million, $3 million, $4 million detached is definitely slowing. I've got a number of listings in that price category I'm not getting a whole lot of action on. On the other hand, we've got the high quality one-bedroom condos in downtown Vancouver, or will include Kitts, Mount Pleasant, Olympic Village area, Fairview, Cambie corridor. That market for the real high quality stuff that I'm always going after on the buying side is still in an incredibly strong seller's market. As a matter of fact, the entire market right now, detached, townhome, and condo, is still favoring sellers. The detached market has probably come down the most, but it still has an active sales to listings ratio around 23 or 24. Remember, anything over 20 is a seller's market. We need to get below 12 to get into a buyer's market. Between 12 and 20 is balanced. Condos and townhomes are up in the high 20s. So you don't ever hear that stat much in the Vancouver or on the media, but we're still, for now anyways, across every product type, still favoring sellers. And now, again, the one bedroom market, high quality stuff, is definitely still in a strong seller's market. As you move up the food chain, though, of course, into the $2 million luxury condo, I have, let's call it between 1.7 and 2.2. I've got 3 or 4 of those listings right now, and I'm not getting a whole lot of action on them. As a matter of fact, 2 of them I've just reduced. Detached, I've got several high quality homes on the west side, 3 and just over $4 million. Again, I'm getting some interest in it, but no serious offers. One of them I just did a substantial reduction on. The one bedroom market, though, high quality one bed. So I just had 2 sales recently in the last few weeks, one down on Hornby Street in a good boutique building. I had 3 offers on that, set an all-time new price per square foot record, way over asking price, subject free. Had another unit that I just sold on Ontario Street, good strata. I own a unit in this strata as well. Just sold that in a pretty crazy bidding war. All-time record price per square foot, way over asking, subject free. So it's a bit of tale of two markets. And again, people always point here in my blog, they'll say, well, when I see a whole bunch of one-bedroom condos, price has been reduced, they're sitting on the market. Yeah, well, there's lots of those, but those aren't the high-quality premium stratas. There's a reason for that. They're hugging up on a bridge, the strata's not very good, there's levies coming up. So you have to separate the two. But let me just quickly go through, I'll paint a scenario for every situation in the current market here. So if the market is starting to slow, again, as I say, especially in the higher echelons in the price category, and where it's going to go, who knows? It could continue to trend that way as we move into the summer and fall. We'll see, and I'll give you guys further updates. But let's look at every scenario here, everyone's situation in this market. So if you just bought a home, your first home, your principal residence, first-time buyer, or maybe you moved up from a condo to a detached house or a townhome or a duplex. If that's you, you have nothing to worry about. If you're a client of mine, you definitely have nothing to worry about. But if you've gotten the right realtor, you have nothing to worry about. Enjoy the home. Because you bought the home, hopefully you bought a home that you can grow into a little bit. It's a home that you can comfortably afford. Your realtor has told you that, hey, you can lock in today at a 5-year rate at 3.75 or 4%. You're good for 5 years, incredibly good, favorable interest rate. But when you come to renew that in 5 years or 4 years or whenever, chances are that mortgage rate will be higher. So you have to allow a buffer for that, for those higher interest rates down the road. They couldn't get any lower than what we had this past fall and winter. They're on the rise now, as I've been blogging about for many years here. So you're nothing to worry about. Enjoy the home. You've locked in an incredibly great interest rate. You're using leverage, the greatest wealth creator that there ever was. You need shelter. It's a tangible product that you need regardless. You need a roof over your head. Certainly beats renting. Enjoy the home, pay down that debt, hang on to it for 10, 15, 20 years, and you are going to do incredible. Second scenario would be someone who just bought an investment unit. Well, if you're an investor, not a speculator, again, you have nothing to worry about. Hopefully you've bought the right unit or the right home. You've got it at a fair price. It's going to be if it's a condo downtown, it's going to be a gravy train for you. You're going to list it on Craigslist and have 10 or 15 applicants. You're going to be renting it for $2,300 or $2,400 a month. You put 20 or 25% down, you're going to have income on the property every year, and your tenant is going to do a lot of damage to that principal and paying your property taxes and your maintenance fees and everything else. Buy it, set it out to sea. I call it the go ship to wealth, and you're going to do incredible on it. Now, if you're a speculator, which I don't work with, and there's very little of that going on anyways, if you're trying to flip homes in this market, and there's very little of that going on, then you could be in trouble. Market could trend lower here, and of course, you've always got the friction costs. You buy a $750,000 one-bedroom condo in Yaletown that's 15 years old. You need that condo to go up $50,000, $60,000 just to break even. With your PTT on the way in, your conveyance costs, and then your commissions to sell. Very little speculation going on. The only thing that there is a bit, it would be renovators. Guys that can buy units, fully renovate them, and eke out a little bit of profit on the other end. But even that is very rare. The third and final scenario would be, you're watching my blog here, you're pre-approved, you're looking to get into your first condo, or maybe you're looking to move up into a bigger home. I would tell you to buy, sooner rather than later, but it's totally your call. I totally understand why some people want to stay on the sidelines, wait for a better buying opportunity, and for right now, especially in the higher price categories, that might open up for you. So by all means, do that if you think you're going to get a better buying window. But keep in mind, interest rates are going up. So, what I've seen so far, any decreases, especially in the higher end stuff, is a result of higher borrowing costs. So sure, you might get that home at $50,000 less, but your borrowing cost might be $30,000 or $40,000 more over the next 5 years. But you can definitely wait for a better buying window if you want, but go back, read my book, or I've done so many blogs on trying to time a market. Very difficult to do. But if you do want to try and wait for a better window, make sure you do a number of things. A, put a time limit on it. You're going to buy or pull the trigger regardless over the next 8 months, 12 months, 18 months. And then set a strike price. If the market goes down 5%, we're going to buy. Or if it goes down 10%, we're going to buy. The other thing, though, but I find with a lot of these timers, though, is you dig a little deeper. Most of them don't have the $100,000, $150,000, $200,000 cash ready to go for the down payment. A lot of the complainers I see are just complainers. They're bitter, they're envious, they want this market to crash because somehow they're going to buy in. Well, they're not going to buy in. They don't have the $200,000 to buy in, even if it did go down 30 or 40%. So be careful with those type of people and those, pessimists you see on a lot of the chat boards out there in the Vancouver Sun or the Globe and Mail. But if you want to wait for a little better buying window, especially in the, let's call it 1.3 and up condo market, and maybe the detached market that's up 1.5 and up, that will be much more influenced by increased borrowing rates. The one-bedroom market, though, I tell you, it is resilient. I've been tweeting out some things here and there. I was involved on the buying side in 2 fierce bidding wars last week. One of them we got, one of them we lost out on. One was 6 offers. The other one I was involved in a couple nights ago was 9 offers. And these weren't priced to get crazy bidding wars. These were priced right. These are grade A stratas, these are the ones that I'm going after. They don't come up very often, and when they do, I'm usually involved in them, either with a principal residence buyer or one of my many investor clients that I've got. So that market, that high quality one-bedroom downtown condo market, or Mount Pleasant perhaps, the real elite stratas, priced under, let's call it 800K, that is pretty much always favoring the seller. Maybe one of these days it might go balanced. I can't remember a time in the last 10 or 12 years where it's gotten into a buyer's market. Lots of one-bedroom condos do go into a buyer's market, the ones hugging up on bridges or in poor locations. But the grade A stuff for the quality one beds, I'm usually going after, rarely gets there. So that's kind of where we're at right now. Market is definitely slowing. Inventory is still quite low, but it is going up slowly. But if you're looking for a good quality one bed or two bed and you come to me, it's going to be a bit of a waiting game. I don't have a whole lot to send you right now. It's kind of, especially for the one bedroom condos, we're kind of waiting for the real high quality stuff to come up. There are some things that I'm keeping an eye on. If they come up or reduce, they're a little bit high right now in price. So it is far from a buyer's gravy train. It's nowhere near that. And again, we're still in a fairly strong seller's market across the board. It is slipping from, at one point the condo market was up around an active sales to listings of over 30. It is slowly coming down a bit here. Stay tuned for another update later this summer. We'll see where it goes. But again, the scenarios are, if you just bought, don't worry about what the prices do here in the short term. Enjoy the home. Markets go up and they go down. We were due for a bit of a pullback here. These are kind of these run-of-the-mill ones. Prices for right now really haven't come off much at all. Maybe they do later this year. But if you just bought either a principal residence or investment property and you bought it right, you have nothing to worry about. Let the tenant pay down your debt. Enjoy the home if it's your principal residence. And if you're on the sidelines right now, pre-approved, have your down payment, and are waiting for a little better window, I totally understand. Maybe see how we go into the summer. Maybe you do get a little better window. But I think I'm under the belief, though, with my clients, if the right unit comes up in one of these grade A stratas, I would go for it. Lock in that low interest rate, put a tenant in it, or move into it as your principal residence. 10 years from now, you'll do very well. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.